Hi, my name's Daniel Jones. I'm the Managing Director of Fair Assessments, the property tax reduction firm. Today I'm here to answer the question, how should I prepare for my property tax appeal? The way to prepare varies depending on whether we're talking about a residential property or a commercial property. The way you prepare for your appeal is very similar to the way you look to see whether or not the assessor's value is correct. For residential, we'll be looking at the cost approach and the sales comparison approach. For commercial, we'll do the same thing, cost and sales comparison, but we'll also throw in the income approach. The cost approach is something that appraisers do all the time, but unless you're an appraiser, it would be very difficult for you to develop a cost approach. My suggestion is you get your property record card from the tax assessor's office. Often this will have the cost approach on it, and you can take a look at what sort of cost per foot they're using, what the percentage depreciation is, things of that nature. And you can also take your properties that you've identified as comparable sales or equity comparables and get those property record cards as well. And you can compare your cost approach to their cost approach to see if your property is being cost out at an unfairly high rate in terms of the cost per foot, or maybe your property doesn't have as much depreciation even though it's the same age as the comparable. Things of that nature. On the sales comparison approach, we want sales that are as similar to the subject property as possible. We want to break those sales down into units of comparison to make it easier to compare them. As I've said in previous videos, units of comparison eliminate the need to adjust for size in most circumstances. So for houses, we will break those down into sales price per square foot of living area. For a hotel, for example, it would be sales price per guest room. For a restaurant, it would be sales price per seat. Once we have those numbers, we'll want to look at the median sale price per foot of living area, or the median sale price per guest room. Median is what the assessors use. Average is affected by outliers or extreme values where median isn't. So always use the median because that's what the assessor is going to be using. So you want to look at the median sale price per foot, and that'll help you decide whether or not your property is overvalued or undervalued, and that's something that you would show the assessor or the Board of Equalization if it definitely showed that your property was overvalued. For the income approach, you're going to have to find rental rates. Rental rates you might be able to find on the internet at no cost, but if you're developing an income approach, you might have to pay for publications that have things like expense ratios, capitalization rates, etc. If you're an income property owner, you'll want to use your own profit and loss information to develop a value estimate. Although the income approach is supposed to be used with market data, you can also use your actual data to support a lower value. And you'll also want to compare the income approach that the assessor is using. Again, look at the property record card. Compare your income approach with the income approach of the competing properties to see if you're getting the same rental rate as your competition, the same expense ratio, the same capitalization rate, etc. Any questions or comments, please contact us at fairassessments.com. Thanks. Hey, if you enjoyed this video and would like to receive 20 free videos of the top questions that people ask about property tax appeals, visit PropertyTaxAppealUSA.com. And please forward this video to friends and family and share it using Facebook and Twitter, and good old-fashioned email works great too. Thanks.